All right, so welcome to the first little piece of this Trading 101 session I put up together for you guys. Today we're going to be going over basic support and resistance and candlestick patterns. So I'm going to start off, and just for a disclaimer, guys, this is how I trade. This isn't necessarily the right way to do it. So be mindful. Don't take what I say as, this is the right way to do it. This is basically just advice. So we're going to start off with support and resistance, this little video. All right, so this is what we're going to be going over today, some support and resistance and candlestick trading. So with support and resistance, the way this works is I like to think of it as support would be your floor and resistance would be your ceiling. Just like a good analogy to think about when you're thinking about support and resistance just as a whole. With resistance or with support, it occurs when a downtrend is expected to pause or reverse due to a concentration of demand. So I like to think of it as whenever price action is above a key level, that would make that level support. So if price action is above a key level, that is support. With resistance, resistance occurs where an uptrend is expected to pause or reverse due to a concentration of supply. So with price action, if price action is below a key level, that would be considered resistance. So with timeframes, I get asked these questions a lot. With support and resistance, I personally draw my support and resistance lines from basically from the 4-hour and above timeframes. I don't use anything below 4 hours. Sometimes I will use 1 hour time frame to get some levels in there, but for the most part, it's just mainly 4-hour and daily time frames. Can nobody see the stream?
I can see the screen.
Oh, I
Yeah,
can see it too.
I see your screen just fine.
Yeah, I see it.
Okay.
Yeah, I had to jump off and jump back on, but it's back on now.
Okay. All right. So with trading, support and resistance, market psychology plays a major role as traders and investors remember the past and react to changing conditions to anticipate future market movement. So the way I think about this is the market trades in basically like a pattern. History repeats itself. So you could have a support and resistance line from a year ago that will still play a big part in price action now. One thing that I like to use as an example that's really current is Boeing. Boeing's high from June just played as a really big resistance level for price action now. So if you guys ever chart a naked chart, go back, to the daily time frame, go back 1, 2, 3 years maybe, and then draw your support and resistance line from there. And then those key levels that you draw will still play a part in price action currently. So with breaking of a support and resistance level, I don't consider a level to be broken until the candle closes above a resistance or below a support. So if you have consolidation near support level and your candlestick goes below that support level at one time, it could still wick back and close above the support. So in my eyes, that's not a break of a support level. That's just basically price got below it at one point in time and it rejected back up. So with support and resistance, you guys have to think of it as it's not just a set price. Support and resistance are areas. So if you draw a line, say at a stock that's trading at $15, if you draw a support line at $9, you can't just say $9 is the support. If price closes below $9 exactly, that means it broke support. It's an area, it's a supply and demand zone. So if price gets to $9 exactly and it closes right there, you have to wait for a nice continuation candle breakthrough of that support level for it to be considered a broken level. With drawing these lines, higher time frames, you have higher confirmation. So if you want extra confirmation on your trades, you want to basically wait for a candle closure on higher time frames. It will take a lot longer, but that's highest confirmation. So with me, I draw my levels on 4-hour and above time frames, right? So I'm not going to say every time I wait for a candle to close on the 4-hour time frame for me to enter a trade. I will use the levels from my 4-hour and daily support and resistance levels, and I will trade intraday, like on a 15-minute, 5-minute time frame for my entry point. Now, with that being said, if my level gets broken, say on a 15-minute time frame, and it does come back down, that's where I'll start, drawing where my stop loss is. Stop loss is based on market structure. So on that higher time frame that I based my level off of, that's where I'll draw my stop loss. So it just all comes in hand, it all plays a part into a big puzzle piece. So once support is broken, that becomes resistance now. So on that picture that I have right there, you could see where it says break in support, that candle right there, right when price broke below that support level, that level is now resistance. And if it broke right back above that resistance, then that level becomes support. So just to basically recap, establishing support and resistance lines. Like I said before, these are areas, not a set price. So just remember, if you guys have support and resistance lines drawn on your charts, do not expect price to bounce or reject or break through a set price. Think of it as an area. People, big investors, institutions, they see these same levels and stuff like that. They might not be exact with yours, but it's in the same area. If you drew them correctly, a lot of people will be looking at these same levels. So really pay attention to the area around that support and resistance line that you guys draw. When price comes down to support, it is not guaranteed it will break or it will bounce. So always wait for confirmation, and vice versa for resistance. If price goes up to resistance point, it's not guaranteed that it's going to break above. Always wait for your confirmation to enter these trades. Sometimes you can anticipate. That would be a lot riskier, but it can be done. I do that sometimes as well. You guys will see when I alert some plays, I'll say, wait for a break above so-and-so level. That's basically me anticipating a break of that level. The way you can kind of play that is if you see, high volume with really bullish or whatever, if you're playing long, if you see bullish market sentiment, like you see futures are actually, they're ripping right now, and the stock that you're trying to go long on is, having really good momentum, high volume, stuff like that, then that's when you can anticipate a break. But if you want to play the safer side, wait for that confirmation, wait for that break, and then close above that level if you're going long, and then opposite for if you're going short for support. And just so you guys know, if you guys do wait for confirmation, you will pay a little bit more premium, but I'd rather pay more and be safer than try to pay, a couple dollars less and, risk that level gets rejected. So always wait for your confirmation. So with support and resistance lines, each time they are tested, that level gets weaker. So say if price comes down, so I'll use this example. So you see that first time support was hit, it bounced back up, came back down to retest. Each time these levels are retested, it gets weaker. So the way I like to think of it is, so as this line is support right now, you have those two bounces. Support, you have buyers at that support level. So when price tried to come down, bounced off that level because buyers stepped in, pushed the price back up. So say at that line you have 100 buyers. So at that first support level, say 50 buyers stepped in to push price back up. That leaves 50 more buyers at that level. I'm not saying this is exactly how it works, but I'm just using this as an example to try to explain to you guys. So when price got bounced on that first support because 50 buyers stepped in to push price up, came back down, 50 more buyers stepped in, pushed price back up again. So that leaves no more buyers at that support level. So next time it retested, it broke through because there's no more buys at that point. I'm not saying this is how it works, but just to give you guys like a little clue on, each time that a support level or a resistance level is tested, it gets weaker. This is exactly why, because every time a level is tested, that level gets weaker just because either somebody is pushing the price up or, the level is it's just getting weaker every time it gets tested. So keep that in mind. So moving on to candlesticks. Before I do that, does anybody have questions about support and resistance? if you guys don't want to speak up, I will keep an eye on the chat to see your guys' questions.
What did you mean when you said the candle closes? Like you wanted to wait until the candle closes to see if it's going to break the support or the resistance?
Right. So actually, it'll go right into candlestick anatomy. So the way that candlesticks work is you have an opening price on that candlestick and a closing price on that candlestick. So the opening price is right where that candle started. That's where, here, let me use my chart as an example so I can explain it better. Did it switch to my chart?
Yeah, it
You guys
did.
see my chart now? Okay. So if I were to go on an intraday time frame, say 15 minutes. All right. So we can use, okay, this is a good example right here. So with this candlestick right here, so I have this level right here at 3859.7. So this candle at one point in time, this candle was all white, or my white candles are green and my blue candles are red. That's how I just like to be a little bougie. But so with this candlestick, at one point in time, this candlestick was full above my level. But when the candlestick closed, it closed below my level. So at one point in time, this candle was full, it was bullish, it was above my level. Some people might enter that trade, but I would not, because the candlestick didn't close above my level. So I don't consider that a break. So if you have a close above the level, which is this candlestick right here, that means the level has been broken. The price closed above this level. So it held above that support level. So now it broke the resistance level, and now it's considered support. So with this candlestick, these actually 3 candlesticks right here, it was broken at one point in time, but it did not close above this resistance level. So these 3 candlesticks, this one level is still considered a resistance because the candlesticks did not break the level because it didn't close above. This candlestick did close above, so that's considered a support now. Did that clear it up, or do you want me to go more in depth?
No, yeah, I get it. Appreciate it.
Okay. Okay, so with candlestick anatomy, so I'm just going to go over the basics just in case there's any, brand new traders that are with us today. So this is basically how candlesticks are formed. So with a bullish candlestick or a green candlestick, you have the opening price being at the bottom of the candlestick. Oops. So your opening price, you can see it says open right there. That's where price opened on this candlestick. At the top, where the body of the candle, so the green part is the body of the candle. Those little black ends, those are called the wicks of the candle. So when the price opened at the bottom there of the green body of the candle, it closed where the body of the candle stopped. So it's not the wick that's the close of the candle, it's where the body ends. That's the close of the candle. So with the wicks, the ends of the wicks, so the top of the wick would be the highest point at which that candle got at one point in time. At the bottom wick, that's the lowest point that price got to at one point in time. So say if this is a daily candlestick right now, at one point in time, that candlestick was at the high and it got rejected and closed right below. That's how that top wick is formed. And it's basically just the exact opposite for a red candle. The open is at the top of the candlestick and the close is at the bottom of the body. And same thing with the wicks. At the top of the wick, top wick is where price got to the highest point. The bottom wick is the lowest point price got to. So with doji candles is basically price opened and closed at the same level. So with that doji candle, it's basically just price opened, went all the way up to the high of the wick, came back down to the low of the wick, and closed where the price opened up. That's basically what a doji candle is. So with candlestick patterns, there are a lot of different candlestick patterns. Here are a few examples for you guys. These aren't all of them, but these are a couple that you guys could pay attention to. With candlestick patterns, you want to watch for exactly where the candlestick patterns are. I like to think of it as, you can't use candlestick patterns just alone. Just like with anything in the market, I always say price action is king. Price action is basically the top indicator, if you want to call it an indicator, that you could use to give you the best determination on where prices are going to go. Price action doesn't lie. Indicators are lagging. Price action is just price moving. So you can't go wrong with price action. So with candlestick patterns, I don't like to use candlestick patterns alone. I like to use them in conjunction with a key level, a Fibonacci retracement level, some trend lines, trend patterns, stuff like that. That's how I like to use my candlestick patterns, just to give me that extra confirmation. So say if I had, say I hammer that first bullish candlestick pattern that you see right there. If I have a hammer candlestick pattern at the bottom of a downtrend, to me, that would indicate a possible reversal. So if I have a downtrend and at the bottom of that downtrend, a hammer was established, I would think of that as a possible reversal. So what I would wait for is a continuation. So if after that hammer was formed, if I see a nice bullish candle after that hammer, then I would consider that a reversal and I would enter the trade. So a little tip for you guys there, watch for candlestick patterns on the top and the bottom of trends. This is a good way to find reversals, like I just explained to you guys. So if you guys want to look at these candlestick patterns for a little bit, you guys can always Google this as well. If you don't know a candlestick pattern, if you hear us or see it in the chat that it's mentioned, you can always Google it, find a picture of it, see if it's bullish, if it's bearish, and what exactly it means.
Are you showing that? Because I only see the anatomy of the candlestick on my screen.
Did it not switch over?
There it is. Thanks.
Can you still see it?
Yeah, I can see the candlestick patterns now.
All right. So with trading candlestick patterns, is my screen switched or is it still on the candlestick pattern?
It hasn't switched yet.
Is it good now?
There you go. Yeah.
Okay. So with trading candlestick patterns, like I said before, you should not solely base a trade just off of a candlestick pattern. You want to have as much confirmation as you can to get the highest probability that your trade will be profitable. So what I like to do is, like I said, use in conjunction with key levels, trends, stuff like that, just to get as much confirmation as I can to enter a trade. So with multiple forms of confirmation, again, the highest probability to profit your trades. So with an example, so right here, you have a downtrend. At the bottom of this downtrend, you have a morning star established. A morning star is just a bearish candle, followed by a doji, followed by a bullish candle. That's what a morning star is. So at the bottom of a downtrend is a morning star. That is my first level of confirmation. So say if this was a support line drawn right down here. If this was a support line, that would be another form of confirmation. My third form of confirmation would be this continuation of the bullish candle. So you have downtrend, morning star established, continuation established from this next green candle that was established. So that's another form of confirmation. So that would be a pretty strong trade for me to enter. So I would enter that trade. Anybody have questions on that? Okay, so I'm going to show you guys a few examples on how I draw my support and resistance levels. Can you guys see my chart now?
Yes.
Okay, so here I have a chart that I have not established any levels for anymore. So the way I draw my support and resistance line is I will start at the daily chart. this is the highest time frame that I'll go. Sometimes I may go to the weekly chart. For the most part, the highest I'll go is daily. So I'll go 2 years on the daily chart just to give me some more price action to look for. So when you guys are drawing levels on a chart, you really just want to draw the levels around where price action currently is. Like if I zoom all the way out, you don't want to draw support all the way down here just because this isn't relevant right now. You know, price is going to go down $40 in a day to where this level right now would be, you know, relevant. So don't waste your guys' time. Just focus on the levels that are around where your current price is at right now. So this is all that I'm worried about right now. So the way I would draw support and resistance on a stock is, okay, so you see this area right here where you have a couple wicks and stuff like that. A lot of people always ask me, do you draw your support and resistance on top of wicks? Do you draw them at the ends of the bodies? How do you draw them? There's really no right or wrong way to do it. Like I said, always remember support and resistance as areas, not an exact point. So if I wanted to, I can draw this key level at the top of this wick. I could also draw it at the top of these wicks right here. There is no wrong or right answer there, but the way I would establish this is I would make it a zone. So like I said, areas. So that right there would be my area of resistance. So if I were looking at this intraday, price is in this basically zone or this area of resistance. So price came up, broke through at once, came back down to retest, and now it's just purely consolidating. So I'm waiting for a break above, a close above, and a continuation above this level, above this area, for me to enter a trade and go bullish on it. So that's just one level. So the level that I would draw up here at the top of this wick. So basically when I'm looking for support and resistance, all I'm looking for is the highest and the lowest points where price got and seen an aggressive move to the opposite direction. So if you see down here, price rejected this resistance, came back down to this support and made a strong move back up. So this down here would be a nice point to draw a support level. And the way I do that is just draw an area. So that's a nice area of support. It's not really close to price right now, but I'm just going to use that as an example. Another point would be up here, top of this wick. Draw an area. Right down there. So that's an area of resistance right now. So after you get your daily levels drawn, I'll go down to the 4-hour time frame just to see if there's any more levels that I may have missed or if there's any that are established on the 4-hour that I cannot see on the daily. So I'll go down to the 4-hour chart, and then you'll see how these levels on the daily just go right to the 4-hour time frame. You know, I really don't see any levels that I missed or any new ones that the 4-hour has established that the daily did not show. So these are good levels right now. That's how I would draw my support and resistance. Does anybody have any questions? Want me to go more in depth or anything like that?
So that middle line that you drew, that's the resistance, or 1 point of
This one right here?
No, the down, the blue area.
This one?
Yeah.
Yeah, so currently right now, this would be an area of resistance. You know, above this, basically 90 right now would be a pretty key level for me on Chegg right now.
Okay.
So if price is below my area right now, or if it's inside of it, that's still considered resistance to me. If price is above it, then this area would be support.
Okay.
Do you guys
So-
want me to
so
go over
you-
that one more time, or?
So will
Go
you
ahead.
enter the play after it hits the 89 price?
So the way I would enter this trade would be on an intraday time frame. if I were to see a strong move followed by a volume, go to, this would be good. All right, so if I see a strong move above 90 with high volume and my indicators are looking bullish, like upward momentum, that would cause me to enter the trade, yes. With that being said, there's a lot more factors that you have to add into your confirmation on the trade. You know, market sentiment. Are we in a choppy market? Are we in, you know, a bull market? Are we trading sideways? Stuff like that. But at the same time, you got to understand that there will be plays out there that will do very good if they have news, if they have upgrades, if there's some type of catalyst behind that play. Like I said, you just want as much confirmation as you can. So say if we're in a choppy market right now, you know, futures are just going up and down. They're not really making any high moves. They're not picking a direction. And say Chegg is coming up to my resistance right now. Say it broke. This is a perfect example right here. So it broke above 90. Where's volume at right now? On that break, volume isn't that high. It's still pretty decent volume considering all this volume back here. It's still pretty high, but considering these two last bullish candles, that break still, like the break of this candle or the break of that level is volume is lower than the two really bullish candles before there. So if I were to try to enter this trade, I wouldn't really enter this trade just because one, we're in a choppy market. Two, volume is not supporting the break of that level. So in my eyes, buyers are not pushing the price above this level right now. They did push it up to that level, but volume did not continue on. You know, this huge volume spike right here, if that was at the break of this level, I would definitely enter that trade. That is a really, really strong move. Does that make sense?
Yeah, that makes sense.
Okay, does anybody have a stock that they want me to chart right now? That was basically the gist of it. I just wanted to give you guys basics on support and resistance and candlestick pattern trading. It's not really too much in depth. You know, some people think that technical analysis is really, really difficult. It's really not. It's really, you know, just keep it simple. The way I trade is I just trade off of the levels. I draw my levels off of the daily and the 4-hour time frames, and I trade off of those intraday. So I'll give you guys an example right here.
Intraday, is that the 15-minute chart or?
Yeah, intraday could be 1 hour, 15-minute, 5-minute, stuff like that.
Okay.
I have a question real quick. So after breaking that area of resistance, if it's with volume and it closes above it, would that next place of resistance be that 95.25? Would that be your next place of resistance?
Yep. So the way that I base my trades off of, so say if, like you said, you have a strong break of this level, high volume, market sentiment is good. You know, say you have some catalyst behind this play as well. You know, it's just millions of forms of confirmation to back up this trade. My price target would be this next resistance level. So right when it broke 90, I would look to exit my trade around 95.25. So with that being said, that is another way I pick my strike prices. So sometimes I will pick my strikes to get in the money, depending on, you know, what stock it is, what the premiums look like, and stuff like that. Mm-hmm. With Chegg, I will look to grab these 95s if, you know, maybe Greeks are better on like the 93s, or the volume and open interest is better. You know, you just have to look around a little bit. You know, don't just, oh, my next level is 95.25, so I'm going to pick the 95 strike. You know, you have to pick the best contract that will, you know, look the best in the trade. And like you guys seen before, my price targets sometimes don't get hit before I take profit. You know, maybe, you know, IV just spikes. There's a really high volume spike right when it breaks 90 when you enter the trade, and your contract just flies up to 50% profit, and you're at, you know, 91.79. Personally, I'm taking that profit. You know, that's good enough for me. Even though I'm $4 below my price target, you know, that profit that just was made in like a couple minutes or a couple hours, whatever the case might be, you know, I'd take that. You know, you never go broke taking profits. And all this consistency, if you keep doing that, that's what builds portfolios. That's what builds confidence, and that's what will keep you basically on the right track to be successful. if you keep taking these 30%, 50% profits and you don't, keep holding until your price target is hit, especially in the market that we're trading in right now, that would be your highest, basically the best form that you could grow and, grow your portfolio, grow confidence, and actually, along the lines be successful because you keep consistently profiting off your trades.
So, one last question. You just mentioned about spiking IV, making that percentage jump real quick. So, when you're looking at I guess, so let's say it's at 89, 88, and from looking on TOS, you see from 90 to 95, it's a 100% move. Well, let's say if it's a 200% move. If there's a spike in IV, there's a potential that if it gets to that strike number, that it could be greater than that just because of the change in IV.
Yeah, so when you're looking at your price targets, there's really no way to know what percent gain that your play is going to be at. So say if I enter this trade at 90, I'm not going to know what percent my P&L is going to be when it gets to 95. If it does get to 90, 95.25, I'm not going to say, okay, since it's from 90 to 95, if I do calculations, this and that, oh, that's a 200% profit, like you said. There's no way I'm telling that, just because there's so many factors in options trading that will affect your contract, how it moves. So if there's no volume the whole time that this price goes up to 95, if it just consolidates or if it just slowly moves up and there's no volume to carry this play, you might, get here and it's 20%. You don't know. But like I said, if there is high volume and IV does spike, your premiums will move. Whenever IV increases on your contracts, that is what will cause your premiums to spike even higher. Even if your price moved 2 cents, if IV spikes 40%, your premium is going to move. You're going to see profit right then and there.
Oh, man. Perfect. Thank you.
Yep. So one way that I like to show how I base my trades off of, somebody always says, how do you find these plays? How did you get into this play? How did you know I was going to do this? Stuff like that. This is literally all I do. So if I were to have Boeing up right now, say this is where Boeing's at. This is the last candle that was established. And here are my levels. So if Boeing just broke above this 100% level that I have on my Fibonacci's, basically this is a missed trade. If I didn't enter the trade after right here, this is missed. Unless if I'm playing psychological levels at 250, which I'm not going to go in depth right now because this is just basically starting from the beginning. This is my next level. So what I would do is I would set an alert. That alert would be set to if price got to this point, to this alert that I just set, if it got to here or it broke above it, I would get an alert to say, hey, Boeing just broke 256.73, which is right below my resistance area. So if I'm thinking of entering this trade, we go a little bit further, say I got this alert. What I'm waiting for is for price to break above, close on a strong move above this level to enter the trade. We go next, that's a huge candle. At one point in time, Boeing, like say if I was watching this on a 15-minute time frame. So right here. So this candlestick right here, this would send the alert through. So right when it broke, boom, I got the alert. Boeing just broke that level. It's coming close to this resistance area. This is exactly why I placed my alerts right below my resistance areas, just so I could have time to basically analyze why I got that alert. I'm not going to memorize every single alert that I put on every stock. So I'll put it right below it so I could have time to, 1, see what stock it is, 2, see what level it's about to break, 3, where did I place this level? Why is this key level placed at the point it is? Is it a Fibonacci extension level? Is it a resistance level from, a couple months ago? Is it a really, really strong level? Is it a, intraday level that I placed before? Why is this here? These are the type of things that I need to look at before I start looking at contracts. So that's exactly why I place my alerts right below a resistance area. So right when this candle alerted me, it got right to the extension level and rejected. So some people might have anticipated it, price broke my alert. So yep, Boeing really moves. I'm gonna enter it right before it breaks my resistance level. And then it rejects pretty hard. It goes down a couple, what is this, from 258 down to 252. That's a $6 move down. If you're holding a contract on Boeing, say if you're holding a weekly or something like that, that's going to be a pretty significant drop on your P&L percentage. That might be 30, 40, maybe even 50% down. And that will shake a lot of people out of trades. And look what it did. Rejected once, came back down, tested again, rejected, tested again, rejected, finally broke through, and a strong continuation. So this should be the candlestick that I would enter the trade. Yes, I could have entered here, but this, because you do have a close above the level, but to me, this is not a strong candle that broke the level. You have this wick, this really big wick on the top of the candle. So that's not a strong move to me. This next candlestick, very bullish candle. You have a really big body on the candle that shows a lot of bullish momentum. So this is where I would enter that trade. And my next resistance at 267.5, that's my price target. And this would be a perfect example of a day trade. You enter at 10:30 in the morning and you exit the trade at 12:30. Just 2-hour trade and you're out. So that's basically how I play these levels, how I use my support and resistance or my key levels to enter trades. Does anybody have questions on that?
Yes, this I don't know if it's completely associated with, but if let's say it makes it's at a new high, or a new all-time high, how do you establish like an area of resistance? Do you just go off of what I guess an average of how much it moves?
Okay, so with that, that's a good question. Say if 270.68, say if this is Boeing's all-time high right now. It's not, but just say it is. So 270.68 is the new all-time high that Boeing just established. The way I would, so say I'd place a resistance line right there. So if price were to get above the all-time high, I'd play that. The way I would get into the way I would play my my price target, say this level wasn't here, I would use psychological levels. So psychological levels are just whole numbers that a lot of investors will look towards for some either entry points or exit points. So after 270.68, my next psychological resistance would be 275. So that's where I would be looking to have my price target. So you have $5 moves, $10 moves, $100 moves, 50, 100, 150, 155, stuff like that. Those are psychological levels that I would use after an all-time high is established.
Gotcha. Thank you.
So once it hits the 270.68 and breaks that, I guess, you will set up the play at 275. Is that what you said?
So I wouldn't say that I would pick 275 strike. It depends on the stock. With Boeing, 275 will be really, really expensive. But with some stocks, you can pick your strike price to be your price target. So if 275 was my price target, if Boeing wasn't so expensive as a stock at 275, then yes, I would pick 275 as my strike price. You just have to play it by ear, with Boeing, how Boeing moves, Boeing can move 10, 15, maybe even $20 on a good day, in a single day. So say if 275 was my price target, but 275 strike was like $900 a contract, I personally wouldn't enter that. That's way out of my position size. So what I would do is, understanding that Boeing really moves a lot intraday, it can move like that. That's where I would look to go a little bit further out the money. You don't want to go too far out of the money to where you're picking a 350 strike price and stuff like that. That's way too far. You still have to keep it a little understanding and give it a little leeway as to, how much does the stock move? How much do I think it can move to get me profitable out of this trade and stuff like that. But for the most part, like with most of the stocks that we play, say with DBX that we played a lot, or actually I'll pick Visa. Visa we played it a couple times last week. You can see right here, this is probably one of the trades that I entered above 223.67. My price target was 228.23. So you guys know me, I always exit my trades a lot earlier than I usually do, or than I usually should, I should say. But, you know, right when it got into profit, you know, we had this really strong move back up, and I just exited the trade. The strike that I took was 230. Just because the contracts that I was looking at with Visa, it was a little expensive. 230s looked really good. You know, you had good Greeks, you had good volume, you had good open interest. So, and it wasn't too far out of the money. You know, my price target was 228. $2 above my price target is not that, you know, it's not that far out of the money to me. If it were to get to 228 and that's where I would exit my trade, just think about it, I'd be $2 out of the money. So it's not that far. You know, these are all the things you got to think about when you're choosing these contracts. Does anybody else have any questions you want me to go over? Do you want me to go over anything that wasn't really explained thoroughly or anything like that?
Hey, no questions in regards to this chart, but may you chart Palantir, PLTR?
Is this something that you're currently in, or?
I was in.
Okay, so with PLTR, it used to be a stock that makes huge moves, as you can see back here. This is one that was on my watch for a while, but after it got beaten down, you know, you just see this pure consolidation here. You know, it's been consolidating for a couple weeks now. With that being said, I would wait for, you know, it to get above, honestly, 30, just because this is the last big move that it made before, you know, this consolidation took place. So above 30, that's honestly what I'm waiting for. You know, I alerted shares not too long ago. So we're just basically sitting on shares. I'm pretty sure they're up like 11% right now. So I'm still profiting off this move that it's making, the smaller moves. But at the same time, you know, I'm not, my contracts aren't getting eaten up by the theta. You know, there's no time decay that are eating at my contracts or anything like that. I'm just in shares. You know, the small moves that's going to make all the way up to 30, I will still be profiting off that. How long it takes doesn't matter. You know, shares don't expire. So that's why I alerted shares. I like PLTR as a stock, but as far as contracts move, I don't know if it's going to get to 30 next week, next month, next year. I don't know. But to me, it's a good company. It's a really strong company to invest in. That's why I alerted shares. But right when it does break a level that I deem necessary to, you know, get back into options, that's when I'll start alerting. Which to me personally, I like 30. Again, just being that this is the last move that it made, you know, last strong move that it made before all this consolidation took place. But, you know, these are my levels that I have right now. PLTR, you know, I have 28.3, 29.2, and then my Fibonacci here at 30. So those are the levels I would personally be looking at for PLTR.
Thank you.
Yeah, no problem. All right, does anybody have questions about the support and resistance candlestick pattern trading or anything like that? So that was basically the gist of the session that we're going to go over today. The next session, I will be announcing what it's going to cover, stuff like that. So wait for the announcement to see what stocks or what topics I'm going to be going over next, and then we'll go from there. This will be the last stock that I chart. So EBON, I don't know anything about this company, honestly. As far as levels, it does look like, you know, they make some pretty aggressive moves really fast in the day, and then, you know, just kind of chill out for the rest of the time. The strong move that it did make right here, I'm not sure if there was news that was behind this. Let me check. But when you guys see these aggressive moves on lower price stocks, you know, just be careful on them. Yeah, I don't see any really big news on crypto exchange. You know. Okay, so it seems like it's basically like a crypto. It runs with crypto apparently. But as far as levels, you know, you'd have one up here. I'll probably have an area established here. A nice area down here. And then obviously highest point right here. So you can see here, last time I rejected this 61% level. So honestly, I would be looking at this level right here. You can see the consolidation around back here. Last time I did trade around these levels, you have good consolidation here. So the last point I rejected was 61.8 to include the area that we just established up here. So honestly, if you wanted to wait for all the confirmation that you can above 11.6 would be the safest entry possible. You can wait until 10.7, maybe even play a quick move, 30, 45, 50 or a 50-cent move up to the bottom of this resistance area that we established right here. You can play a quick move like that. I'm not sure how the contracts move with the stock, but above 10.7 could be bullish up until 11.2. Above 11.6, you can see it to 12.57. So that would be the end of the session, guys. I appreciate y'all coming out. As always, if you guys have suggestions on what you would like to see on the next session, as you guys know, I'm starting this little trading 101 series for you guys. So I'll announce what topics we'll be going over next week. It'd be next weekend. So if you guys have suggestions on how you want the session to go, if you guys want to see any changes, anything added into it, just DM me, or you could drop it in the suggestions channel in the Discord. I appreciate you guys coming out and enjoy the rest of your weekend.